Hi everyone, and welcome to our podcast today, Navigating the Real Estate and Mortgage Landscape. I'm Helen, your local real estate agent in Sydney, and today I am joined by the mortgage broker himself, James Chi. How are you doing, James?
I'm great, Helen. Thanks for having me today, and looking forward to diving into some of the frequently asked questions you get by some of your clients, and also hoping to share some mortgage knowledge with the rest of the audience here.
Awesome. So whether you are a first home buyer, an investor, or just curious about how the real estate and mortgage worlds intersect and work together, you are in the right place. Today we are going to be sharing insights, tips, and even some success stories to help you navigate the progress with confidence.
Absolutely, and we're also going to talk about some specialized topics that I know you've come to me with some of your buyers with, such as off the plan, house and land packages, deposit bonds, all of those property types as well, and we'll try and get everyone started in the right direction.
Okay, segment 1, the real estate and mortgage connection. James, let's start with the basics. How would you describe the relationship between real estate agents and mortgage brokers? Why is it so important for us to work closely together?
That's a great question, Helen. Basically, the relationship between a real estate agent and a mortgage broker is like a well-oiled machine in terms of being able to create a seamless experience for the end buyer. Our clients, depending on where they are in the real estate journey, they've either approached myself as the broker for a pre-approval, or they've come to you a few times for open inspections. And basically what we need to work with in terms of you and I, or a broker and a real estate agent, is trying to find the sweet spot to help convert that client. So in terms of getting that sale, that could potentially mean getting them the finance approved, that could be getting them the deposit approved, or perhaps it's even getting the price within their budget. So what we can do is, by coordinating early enough in the process, you and I, we can help these buyers and these clients get a better understanding of what they can afford earlier on, and that opens up more opportunities for us to transact with them. If we can take out the stress and the guesswork and make it less tiresome and less confusing for the buyer, I think that's a really great outcome.
Yeah, that's exactly right. I mean, we've worked together on a couple of transactions previously, and I love working with mortgage brokers who are on the ball, which means that we can confidently advise our clients on what is within their budget, what they should be looking at, and avoid those heartbreaking situations where you fall in love with a property and you miss out either because of your budget or because you're not ready with your financing.
You've hit the nail on the head. Setting a realistic expectation from the start and ensuring that they understand which direction they want to head in, that's the way that a broker and a real estate agent should be approaching each of their clients. You're able to deliver a better service, I'm able to deliver a better service, and that just helps us doing repeat business with each other because we know what to expect from each other.
Okay, great. Segment 2, key mortgage questions. Let's talk mortgages, James. This is an area where lots of people have questions. Even I have questions for the mortgage brokers that I deal with the buyers that come through. What are some of the most common things your clients ask you about mortgages?
So mortgages can definitely be a stressful and overwhelming process. Now, most people would typically think that if you bank with a certain bank or institution, that they would also offer home loans. Sometimes the first point of contact is their existing banking relationship. Now, that's fine. The problem is that not all banks and lenders offer the best product to suit your circumstances. So, for example, it may be a situation around credit, around lending policy, income, whatever it may be. The role of a broker is it is to find those solutions and marry up those lending policies that best fit the client. So one of the questions that I get often is about fixed and variable, whether it's LVR percentages, LMI policies. It can always be even a situation of offset and redraw, as simple as that is. Not all of these features and facilities are standard across all lending products. So when I get approached by clients and they say, hey, I'm looking for a pre-approval or I'm interested in taking out a mortgage, me trying to find the best product for them really depends on their situation. So I will go through a questionnaire and we'll have a discussion about what they're after, what they need, what they want, what they don't want. And it's just about going through this refinement process, and getting the best outcome can take a little bit of digging, but at the end of the day, making sure that they're comfortable with it is the end goal.
Okay, that makes sense, and it sounds like a lot of what you do is about education, making sure the clients understand their options so they can make the most informed decisions and what is best for them.
Getting a clear picture of their goals, making sure that they don't feel overwhelmed by the complexity of the loan process, trying to coordinate between an agent or a conveyancer. All these different things are manageable. Now, sometimes we can run through the process simultaneously. Other times we have to do it in certain sections and pieces. But at the end of the day, making sure that we've done the research to educate the buyer is a great outcome. So obviously if we transact with them on that basis and they're happy, they've had a good experience, they haven't gone through any stages and wondering when's James going to contact me, when's the lender going to be sending me documents, all these things make a difference. And it's as simple as informing them via email, or it's explaining what the repayment schedule is going to be. All of these points of information is pretty much from start to finish. It's not as though we're going to just be providing information at one point.
Yeah, fantastic. And even I've prompted you quite a few times with a buyer that we've recently transacted with. I'm really happy with it. Segment number 3, understanding buying off the plan. Let's dive into buying off the plan. This is an area where both our roles really come into play. We're with the buyer throughout the whole time. James, can you explain what buying off the plan is and what the client needs to know from a mortgage perspective?
Yeah, so buying off the plan means, in simple terms, purchasing a property before it's actually built. When it comes to negotiating a contract or you're talking with a builder or developer, you're transacting on their promise that a home or an apartment will basically be built in the future. Most of the times, actually. These will have drawings and 3D models, and also sometimes display suites that you can visit and speak to yourself, Helen, about what the end result can look like, what the configuration and spec will look like. Now, that is a great way to secure a property if that's what you're after, and you will obviously be able to transact before the rest of the market sees the finished product, and that also means you can potentially negotiate price savings. But at the end of the day, when it comes to lending against these types of securities, there can be a few challenges that buyers aren't always aware of. So Helen, I'm not sure if this is something that we're going to touch on, but sunset clauses, we're looking at land sizes, deposit amounts, all of these things matter when it comes to financing off the plan.
Okay, so what makes the financing different for these kinds of purchases?
Well, the first difference that oftentimes becomes a problem later on is the property's value can change between the time you transact, say 12, 18 months prior to completion. So the bank might want to revalue the property. Say, for example, the contract price will be $650,000, and then in 12 months, 18 months time, it's say $750,000. So what valuation do we use for lending per? And that also affects the LVR of the loan. On that basis, if we look at the valuation, then we also have to look at the deposit. So what type of deposit are we putting down? Is it 5%, 10%, 2.5%? Are we using deposit bonds? Are we going into LMI territory? All of these things matter. So trying to have that conversation, like I said, with keeping in touch and giving them information, just making sure that they know what their options are when it comes time to transact is really important.
Yeah, that's right, James. It's really flexible and it's dependent on each developer. Some developers are very strict and want a 10% deposit when you initially buy off the plan. And then we work with other developers who are willing to accept 5% upon exchange, and some other developers are open to a repayment paying scheme, which is really flexible for the buyer. Segment number 4, navigating the home buying process together. Let's switch gears a bit and talk about the home buying process as a whole. This is what I think 80% of what the buyers are doing right now. They're buying established property. How do you see our roles intersecting to make this process as smooth as possible for the buyer?
A good way to think of home buying in general is like a relay race. You as a real estate agent would be the first point of contact for most buyers, and you would help them along the way, help them find the right property, right price, etc., etc. Once they've found the one that they think is what they're after in terms of price and specification, they will then want to come and speak to a finance broker potentially about financing that property. That's where I guess the baton is exchanged, and I would then go and talk to the customer or the buyer about what they can afford and what's in their budget. Throughout all of this, communication is vital between you and myself, and also between me and the client and the buyer.
Okay, great. I totally agree with you. I would even go as far as to say I actually send the buyers to a mortgage broker first and say, come back to me in 2 weeks. Once you have a pre-approval, then we can start shopping. I just want them to have a pre-approved loan, which gives them a clear target and aim. And then they can focus on properties that are within their means and properties that they like. It speeds up the process. It is much more efficient, and when it comes time for them to make an offer, they're ready.
For sure. And from my side, what I see as there being no surprises. For example, I was working with a client who was concerned about credit score. We knew it could potentially be an issue, so before we did the finance, we checked the credit score. Same thing, another client who was interested on their tax position. James, can you make sure that the lenders who we are interested in aren't going to have a problem with my tax position? And making sure we address concerns up front gives us confidence that we can secure a property and a loan later on. Now, within the realm of what you have access to, there are certain properties that you know are within budget and without of budget, and then we can go and tailor their pre-approval according to that, whether it's price, location, density, if it's an apartment. All of these things make a difference within the process, and making sure that they're factored in earlier on, it makes the process even simpler.
Absolutely. That is how I love to work, and that's how I love to guide the buyer. Segment number 5, common challenges and expert solutions. James, what are some of the common challenges buyers face when they are trying to secure a mortgage, and how can we help them overcome these hurdles?
By far, one of the most common problems that I see for most borrowers is an issue with their credit report. Prior to us applying to a lender, best practice would suggest us to discuss with the buyer about their credit profile. If it's a single applicant, yes, we'll just run through one Equifax report. If there's a spousal relationship or de facto relationship, even if it's a situation where it's a company or a trust even, we'll still go and look at the beneficiaries or the directors to see where their credit status is, because if we look at lending from a historical standpoint, the lender needs to be sure to a high degree that the customer has had previous debts, that they've been able to maintain those debts and also show good conduct on them. Now, some lenders are flexible enough that they don't actually look at this credit scoring. Now, there's no judgment when it comes to seeing an adverse event or there's a missed repayment. Even if it's talking about what can we do to correct a bad credit event. So, for example, one customer I had recently, they had some identity theft. You know, if they've got their ID stolen, for example, if it's been scammed through one of these hacks, it wouldn't be surprising for people to see credit inquiries or credit cards, automotive loans on their credit report, and they've seen this for the first time and they're wondering, where did this come from? I have no idea what this is. So just being able to then provide mitigation to the lender is also a great way to kind of comfort them about what's been happening.
Are there any unexpected costs that the buyer might face?
The major contribution that the buyer will have to make to the transaction is their down payment and their stamp duty. When it comes to stamp duty, this is obviously a non-negotiable, and as we've discussed previously in some of the scenarios that clients we've spoken about, we have to walk through all the numbers so that they know when to expect to pay these costs. So it's not only unexpected costs, but the timing of them.
Yeah, I love that. I love being prepared. I love knowing things that will happen in advance. And I assume that this kind of preparation will help clients and buyers feel more confident as they move forward with their purchase. Segment number 6, the future of real estate and mortgages. So let's talk briefly about where you see the real estate and mortgage markets heading. You speaking to the mortgage markets, James. What trends are you seeing in the mortgage industry that our listeners and buyers should be aware of?
It's no surprise that the mortgage industry is evolving, and the way I see it evolving is through the rise of digital lending platforms and practices. More lenders are now starting to offer online applications, fast approvals, digital signatures, online desktop valuations, and that's just a process of there being more information available, more integration between different platforms and different systems. And this is great for buyers who value convenience and speed. As you've seen, Helen, people are coming in one day, or multiple buyers may be coming in the one day to see the same property, and it could be a matter of hours that some buyers need to find out whether or not they want to transact. So if we can provide an approval within the same day or a few hours even, and that means providing the checklist of information and being able to satisfy all of the different credit policies, we can provide customers and buyers with the assurance that their loan is in safe hands. Now, look, that's not the case for everybody. More complex matters require more time, but for those straightforward transactions where we need pay slips, we need bank statements, we can provide a lot of convenience in that area of the home buying process. And look, in terms of interest rates, yes, the market's changing in that front every day. People always have an opinion. There's a lot of speculation, but it's important to remember from a broker's side of things, we can only provide what's available in the market. Now, there is some pricing discretion, which again can be approved as well online, but generally the way that mortgages are moving are to a more streamlined fashion.
Okay, accuracy and speed, I love it. So on the real estate side, I'm really excited to see some interesting trends pop up as well. We've got a lot of buyers looking at new development as well as house and land packages. People are being priced out of established property, especially in blue chip suburbs, which means that they have to move out to areas that they probably have never heard of before. But their friends and family are doing it too, which makes it easier for them. Or they already have existing friends and family living in those suburbs.
For sure. And also one last thing I might add to what we're seeing in the market as well, and it varies depending on where you look, but is the rise of this green and sustainable home loan. Now, this is not something that has traditionally been available, but what's emerging is that more people are looking for electric vehicles, they're looking for charging, they're looking for solar panels, they're looking for rainwater tanks, whatever it is. And so what the lenders are starting to recognize is that if they want to be part of this movement where it's green, it's environmentally sustainable, and there's a low environmental impact compared on especially new constructions, they will offer certain discounts and pricing compared to traditional products or to traditional homes and apartments that don't have that same environmental rating?
Yeah, absolutely. I totally agree with you on this. Segment number 7, a little bit about Helen and James, a little bit about us. So this is all we have time for today. So James, it's been so great chatting to you about these topics that I think the buyers really need to be aware of before they set out in their buying journey. I think we've covered a lot of valuable ground for our buyers and listeners.
Thank you so much for having me, Helen. And on a final note that I want to stress for our audience here is that when it comes to mortgages, it's really a personalized service. It's tailored to you. It's tailored to your circumstances. It's tailored to your life goals. It's tailored to whatever it is. It's tailored to your budget. All these different criteria is what we use to help get that right product for our clients. As a broker who's helping buyers on a daily basis, I'm seeing that my service or my value add in this equation has really come down to providing that guidance that perhaps wasn't there originally or has previously been lost as a result of burnout or it's a result of being priced out of the market. So I offer these services to residential clients, commercial clients, commercial construction, SMSF, non-resident, all these different borrower profiles I can help with. And it's something that I've learned over my time establishing the brokerage and being able to help people identify and marry up these solutions, whether it's providing a obligation-free health check on their current financials. All these different things help buyers in the grand scheme of things.
You know, it's very similar to what I do as well. No two buyers is the same. Two buyers can look at the same floor plan and feel very differently about them. And yes, I do offer a personalized service such as yourself. And I'm so glad that we get to do this together for each buyer that we deal with together. It really is hand-holding the buyer all the way through to completion. And that could be anything from 6 weeks through to 18 months. We need to have those hard conversations up front so then it would be smooth sailing all the way through to the end. And like I said, we're in conversation with you once a month, and then towards the pointy end, towards settlement when you get your keys, we could be in conversations with you every day for the last 2 weeks of the leg of the race.
Yeah, and look, there's no silly questions when it comes to finance and real estate. It definitely pays to be sure about what's going on. And so just whether it's a phone call, text message, email, whatever it is, my clients are more than welcome to reach out to me and ask about their options, and I encourage them to do that. And so I would definitely extend the same level of professionalism to Helen, to your buyers, and also to the audience out there as well, that, you know, they can reach out to us and discuss what is available to them. And look, that may lead to a further conversation and a further conversation, and eventually it may lead to a transaction. Otherwise, we may need to just put it on pause and then come back to it. Helen, in your case, you would be the same thing. Everyone's a buyer at some point, and that's what we've got to look out for.
Yeah, that's right. And don't hesitate to reach out to either of us with any questions or to schedule a consultation. We're here to help your home buying journey be as smooth as possible and as successful as possible. Take care, everyone, and happy house hunting.